All right, here we go. Stocks by the numbers. Welcome back. And markets had a little bit of a bounce back today. Trump came on, talked about tariffs. He might lift some, he might keep some in place. People obviously need to understand that this is basically about leverage, right? Even people mentioned in the Discord, this was basically what he says in the art of the deal. He likes to have leverage when he talks about doing deals and whatnot. But basically, he just wants, again, to kind of just put us on a level playing field when it comes to the tariffs and the trade deals that are set in place here. But in my opinion, I do still think that markets are going to continue to sell off. I just wanted to do a quick update here on some of the trend lines I drew out recently. I know I was looking at the three major indices with you guys over the last couple of days, and of course we had just a couple of big updates from about two names I want to look at very quickly. But first up here, we're looking at the Dow, right? And first of all, we technically broke below this trend line here. Okay, I know I'm whistling here, bear with me. But we have mid-August 22 coming up, touching right there. Looks like the first day of August 23. Just going across to those tops there, meeting up right in that consolidated area where it paused, flattened, and it took a next leg higher. You can see it perfectly meets up with the bodies there. And we cut that across. Coincidentally, it's basically exactly where the market dropped to yesterday at the low. And then you can see today we kind of above it, below it, and we ended up sitting right here at 37,965, technically below that mark. We did come down and flash break through this fib right here. This is the 1-year chart, by the way. This is our golden ratio, 1.618. And 37,365.92, right? So we broke to 36.6, and then we had a little bounce because I know he came out and spoke, so markets started to, I guess you could say, stabilize a little bit. But in my opinion, I do think that even if we bounce and try to reclaim some fibs and get above a trend line, I do think that we end up rejecting and we kind of do like this step down here going into, in my opinion, June, July. I think it's going to last several months. I really do. I don't think this is going to be like, oh, we're dropping for a week or so, we'll bounce back. That's why, again, a couple of days ago when I was tweeting out, talking in the Discord, I jumped on and made a video, and I was just saying how on the first big red day, buy the dip was trending. They were telling you on CNBC, oh, buy the dip, it'll pay off. Yeah, listen, I'm sure it will, but as we used to say when we first started the channel, when we're talking about long-term investing, positioning yourself, it's all about pricing and timing. So, can we buy now and be fine in a year or two? In my opinion, probably, right? But if we kind of know, quote unquote, that a big market sell-off is going to continue, then anything we're eyeing right now could probably get for an even more attractive price. And that's why I jumped on, tweeted out, just to kind of warn you guys, because they, again, to my knowledge, I don't remember CNBC or anyone coming out and saying, buy the dip when the market's, chunked down. So that's why my antenna was raised a little bit. But we're looking at this other trend line as well, cutting across the tops, January 4th, it looks like 22, touching right there, same point, August 1st, 23, cutting down. And you can see if we were to immediately drop there, we're looking at about 34.4, which, is about a 10% haircut from here. But also I wanted to show you that this is another support trend line. Hold on, I got to back it up. Too far. Okay, so this is going from the bottoms of 09, coming up, touching the bottoms right there of the lockdowns there in 2020. And that's just coming straight up, okay? So if, hypothetically, we happen to break a bunch of these lines, this support trend line here, we're looking at about 30,000, sub 30K. And I wanted to show you also as well, we kind of began to curl and beeline straight up here before the lockdowns and the markets tanked, right? And you can see the high right there, 29,568.57. And that's this level right here, which, as you can see, if we do happen to like slowly come down to this support level, we'd be at about 30,000 and change. So we might not necessarily break down and hit that mark. But I did keep saying that, in my opinion, the last 4 years of the market raging under Biden with poor economic data being reported was really all BS. And as much as we went up, we realistically could come down that much. So that's why I just wanted to point out again, something like the Dow was at the high 29s, maybe we can call it around 30K before the lockdowns, and then, you know, the whole economy started to get worse with the hyperinflation. So if we were, hypothetically, to just pull back and hit the reset button over the last couple of years, you'd be looking at about a 30K Dow. Just putting that out there. Nasdaq, we flash broke, look at this, below a couple of trend lines here, and then we had a bounce back to 17,430. But you can see this trend line cutting across here. Again, this is mid-July 23 to that top right there, end of November 23, connecting, touches that bottom perfectly, January 2024. So that comes across, bang, bang, and we bounce back above it. And this trend line as well, going from the tops here, July 11, 24, looks like August 22nd, 24, just cutting right down to those tops. And you can see that's basically where it dropped to, and then it began to bounce and climb up off of. So if these trend lines are showing us the next couple of steps down, then you can see that it may possibly get much worse before it gets better. And again, you know, people, even in the Discord, they're saying, oh, this is extreme. You know, is the Fed going to do something? Is someone going to take action? Blah, blah, blah. This is not a stock market crash. This is not 2008, where the Fed had to step in and apparently use our money to save all of these other companies. No, this is different. As I said, the markets are up 50% over the last couple of years under the last administration. What goes up must come down. And that's why, again, I was speculating. Did I know exactly when it was going to happen in the beginning of April? Markets were going to start chunking down big? Of course not. Of course not. But I did mention that after this big run-up, and when we were talking about Trump coming in, and again, whether we were talking about tariffs or not, in general, he was talking about the reinvestment into America, right? Trying to balance our budget, you know, get the debt in check. So even if we don't talk about tariffs and we just look at the other policies he was looking to implement, as I speculated, it was going to increase the value of the dollar. It was going to raise rates. You can see even yesterday rates dropped down, and a lot of people, well, not a lot of people, but one or two people mentioned in the Discord about TLT, right, which tracks the 20-year, and they were speculating calls on TLT. TLT goes up when yields go down, and vice versa. And in my opinion, I said no. I think yields are gonna come back. I think yields are gonna stay up, and I don't know if TLT would be the play. And you can see, you know, again, you know, we know it's all hindsight. You could be right, you could be wrong, but you can see a day like today, you know, market stabilized and yields spiked right back up 5%, reclaiming basically everything they just lost, right? So that's why it's funny, because like the markets are gonna drop, but in my opinion, the actual strength in the investment in America should technically be fine over the next couple of years. We're probably going to have a strong dollar. Our yields are going to be up. Hopefully the Fed rate comes down, right? We start to see mortgage rates come down in check. So we'll see what happens, because, you know, what people don't understand is, you know, we talk about tariffs today, markets start chunking down for a week or two, everyone starts shitting their pants. But in reality, you need to understand that these things take 6 months, 12 months, right? 24 months sometimes. So you may not see the result for a while. But again, we kind of knew that this was going to happen. But anyway, back to some of these trend lines here. So this trend line about 16,650, which again, in my opinion, look at this perfect run up right to that fib of 18,204, hit 18,191. Okay, so almost hit the fib. And then we pulled back here. But in my opinion, again, we continued down. I do think we continued down. This trend line here is about 15,768. We got a fib here at about 15,324. And then again, this was the little downward consolidated channel the markets went through during summer of 23 before we flash broke up to the upside, right? And if we look at the bottom there of that first spike, the key level about the mid of that consolidated range, you're looking at about 14,560, 14,580. So yes, in my opinion, I think it can drop all the way back there. And again, we're being nice. We're being nice, right? Because even with the Dow, I looked at the peak before the lockdowns, right? And if we look at it here on the Nasdaq, which of course tech led the way, again, I speculated that under Biden, just like under Obama, tech would be the best performing sector, while a lot of the other sectors kind of just hung out or potentially even sold off and struggled. And we saw, of course, that tech was the biggest winner over the last couple of years. But hypothetically, if we do pull the Nasdaq back to where we were pre-lockdowns, again, you can see slight 10K. That seems a little drastic. That seems a little drastic. However, I'm sure if we look at each tech name individually, we'll probably find that more times than not, they're overvalued as opposed to undervalued, right? Because they were the ones being pumped for the last 4 years. So it's not crazy to say that. But probably not going to happen, in my opinion. But if you go from the lows here, again, lockdowns, March 2020, touching those lows right there, January 23, that would be this bottom trend line here. And you can see we're looking at potentially just shy of 14K. You're looking at about 13.8. So obviously there are multiple levels to watch here on the Nasdaq on the way down and also on the way back up, because we technically did gap down, right? So we might open and go up a little bit tomorrow to about 18.5 and then reject on the gap fill and start dropping back down like we were. So that's something to keep an eye on. But realistically, honestly, in my opinion, I mean, back to the low 15s, even about 14.5, in my opinion, that really should happen. It really, really should. S&P dropped down basically to this trend line and pulled back almost to the low of yesterday, which, correct me if I'm wrong, I believe still indicates bearish. It still looks bearish, but we'll see what happens. Again, it could also potentially pop back up and gap fill, just like we saw with the Nasdaq. But just to draw out some of the trend lines here. Okay, so this support was from mid-March 23 to the low of October 30th, 23. That's this purple trend line coming up that it just touched off of, right? So about 48.50. And you can see we hit 48.35 and then we bounce right back up, right? We have this 1 year fib though at about 47.47. If we come down, connect those tops again, just like we did with the other major indices, from the high first week of January 22, July, end of July 23, coming down, cutting across, you can see we'd be sitting at about 43.80, we'll call it. And of course, the big mamma jamma, if we come back here from the lows of October 2011, and we cut across, I think I hit the body. Yeah, see, that was the flash break. I went from the bottom. I also drew it on the 5-year chart, right, because it was hard to fit everything in. So again, it might not be precise to the point exactly, but you can kind of catch my drift here of the support level that I'm drawing out. And you can see if we really do pull back, look at this. See the way like we hit this high kind of around here, the high 35s, and then we did like a W and spiked even higher to about 36.50, flattened out, and then took the next leg higher, right? So we were at, it looks like about 3,400 before the lockdown. So if you want to give it a slight premium, right? Again, I'm just speaking hypothetically. Hypothetically, if the last 4 years was mostly nonsense and we pulled back to around 2020 levels, as you can see, you're looking at about 3,400. You want to give it maybe a 7, 8, 10% premium to that price based on actual growth that has taken place over the last couple of years. Now you're looking at about there, right? Right near that spike up. So you're looking at about 3,600 and change, about 3,650. And you can see if we were to start to pull back, look, this is July 1st of 25. If we come down right around this trend line, you can see we're sitting at about 3,652 in change. So in my opinion, of course, just like the other indices, there are multiple levels for you to watch, but I do seriously believe that this is just the beginning. I think we're going to get a big, big drop coming across the board. And again, the people who were crying stock market crash, as I said, are probably younger, newer traders and investors who have just gotten in the market in the last 3-4 years. This is all they know, and I was constantly saying time and time and time again that the most dangerous thing is a fake, overpumped BS market. And no one believed me, no one understood what I was talking about, and now it all makes sense. And unfortunately, that is always what happens, right? We warn about the potential volatility, we warn about the sell-offs, we try to warn investors. Well, I don't know how many people out there are actually prudent. I know I try to warn people, but that's why I always said, it's good to diversify a little bit. Don't go all in just tech or one sector. You should try to have hedges in place. You should always keep cash on hand, right? I'm seeing that constantly in the Discord. Oh, I wish I had more cash on hand. I should have kept cash on hand. Or a couple of weeks ago, I sold and, made a cash pile, and now I'm glad I did. Everything's selling off, so I'm going to be able to buy some stuff that I wanted to at a good price. So that's why cash is king, like they always used to say. But we'll wrap it up real quick with these two names. So first, Broadcom AVGO has obviously been doing phenomenal over the years, but I just wanted to do a quick update because they had a nice day today of about 5 1/3% here on the rebound, and we're up another 2.8% right now to about 158.5. And the company announced a new $10 billion share repurchase program. So, of course, with all of this nonsense and negativity going on, something like Broadcom that has been a steady winner, let's back it up even more just to show you. I mean, look at this. Doesn't really get much better than that, right? And the company has, for the most part, been consistently growing, increasing profitability, consistently increasing revenue. Look at that big jump into 2024. And now, of course, in the midst of all this negativity, they're saying, oh, hey, by the way, $10 billion share repurchase program. So they're kind of feeling that this around here is a decent price for their shares. But also at the same time, they could be announcing it to kind of hold the shares up. 10 billion, yeah, I don't know, debt was coming down. Equity up huge. Actually, could be viewed as kind of overvalued, but they do keep winning. It's hard to call. It's hard to call. Again, this share buyback, definitely a good sign, right? We know that, but could be a little premature. Because again, if we're speculating that the Nasdaq and the other indices are going to continue to sell off, then, in my opinion, stock's going to be down here at 110. But I just wanted to mention that news because that was a little silver lining on a dark cloud. And also U.S. Steel bouncing back big today, 16.25%, jumping back up to 44.5. Looks like it's almost on its way to 45 here after hours. And we got the news that Trump orders new review of Nippon U.S. Steel merger. So we know we've been going back and forth with this U.S. Steel announcement. A lot of people are in favor of it. A lot of other people obviously are against it. In my opinion, I'd say it's not a good deal. But we know money talks and bullshit walks. But U.S. Steel's been maintaining that 20-cent dividend. The debt hanging out at about 4.3, dipped down to 4.25. Right, we got about 1 1/3 billion cash on hand. Assets outweighing liabilities. I still say, in my opinion, they offered 55, and then they mentioned that they would take a couple of $1 billion and reinvest into America, right? So overall, the deal is worth, even a couple of billion more. But I still say they're really lowballing this company. They're really lowballing this company. And if we look at the numbers, I personally put a value on this stock at like $80 to $90 a share, which is why 55, when we got the bid, I thought it was just the beginning. But apparently, I don't know, it seems like a lot of people are trying to push that deal through. And, they're making out like it's a good offer for U.S. Steel. But you can see assets heavily outweighing liabilities. If we subtract debt from cash, we're at minus $3 billion, right? But if we come over here, we can see equity's been steadily climbing. It's up here at 11.5. So if we subtract that number from the equity, now we're at like positive 8.5 billion. And then we come down here, and even with the drop in revenue, you can see they brought in like 16 billion for the year, right? So 8, 16, in my opinion, fair values at 24 billion dollars for this business. Market cap right now, 10 billion. So if we were to double that up, we're sitting at around $90 a share. Now, to some, that might be excessive. In my opinion, I think that's what it's worth. But, you know, only time will tell. Again, we can see book value sitting here above $50 a share. And we know that a lot of stocks trade, again, 1.5, 2, 2.25 times book, right? So that's why I'm saying like $70, $80, $90 a share. I mean, that's really not reaching too far, in my opinion. But, let's see. Okay, new review. It was blocked by Biden. Nippon Steel said that an objective, fact-based review of our proposed partnership with U.S. Steel will show it strengthens American economic and national security so that U.S. Steel remains a proud American company. U.S. Steel shares surged. Yeah, been in limbo. Yes, correct. Biden blocked the merger, citing national security concerns. Huh? We appreciate and commend President Donald Trump's leadership. His action today validates our board's bold decision to challenge President Biden's unlawful order. Yeah, shareholders approved the sale of the company a year ago, though the United Steelworkers Union has opposed it. I still say it's a low ball. But this is why, again, you know, the stock has been volatile, but see the way, you know, it'll drop down into like the mid-high 30s, and then you'll see it just spike back up to like 42, 44. The reason why is because if they offered 50, 55 a share, then that is what the stock is worth. That's what buyout bids, that's what it means when these companies buy each other out and make these offers. A stock is worth what the next person is willing to pay for it. So we originally started at 35, then we got multiple bids up in the 40s, and then we got Nippon Steel at 55 a share. So even if the stock tomorrow opens at 27, guess what? It's worth at least 55 a share. End of story, right? And we just saw the book value's 50 a share. So that's why no matter what the price was doing, no matter what Washington was saying, I kept saying, in my opinion, U.S. Steel. U.S. Steel, U.S. Steel, U.S. Steel. Again, originally brought to you on this channel, $19.70 a share. Nippon struggled for years in its home market. And of course, we have the recent tariffs on aluminum and steel, which of course helps out our domestic companies. Hold on, wait, but they were talking about the investment. No, was that a different article? The deal values the American steelmaker at 55 a share, far above where shares currently trade. It's been a volatile session. Trump's tariffs boosted domestic steel prices, benefiting steelmakers. Benchmark prices above 900 per ton, up from 700 at the end of 24. Right, it's only been a couple of months. Just went from 700 to 900 a ton. Okay, we're reading. Activist investment in Cora. 55 a share stock might not be too bad after all. Again, they're looking to cash out. They're looking to see profits. I'm reading. Yep, drama. 35 cash, Cleveland Cliffs. Nippon 55. Opposed by lawmakers. Appear dead set against the Nippon deal. Although we understand why the board explored strategic alternatives in 2023, its ultimate decision to ignore national security and pursue a risky sale to Nippon, an overseas bidder that came in just $1 per share higher than a competing domestic bidder, has led to a dead end. Or sought to replace U.S. Steel CEO with former CEO, make U.S. Steel great again in the public market. U.S. Steel's quote, securities filings and other public reports about increased capital investments indicate that the prospects for the transaction have significantly improved. Nippon committed to investing almost $3 billion in America to make the deal happen. That amount could rise to as much as $7 billion, according to reports. Right? So now overall, we're talking, like 20 billion? Right? 55 a share would be what, like 12, 13 billion in change market cap, plus as much as 7 billion. Quote, while we and others believe the government is unlikely to reverse its position, our slate promises not to stand in the way of the deal should it receive approval from the Trump administration. Economic outlook is cloudier. Trump tariffs set the markets tumbling. If the 55 a share deal doesn't go through, Agora wants to sell the Big River Steel, which U.S. Steel owns, for $8 billion. Okay? The current market cap of U.S. Steel is $10 billion. And if they want to sell off this mill here, it's $8 billion they're looking for. It wants to return $5 billion, or almost $20 a share, to investors as a special dividend. It would use the remaining $3 billion to invest in existing facilities to boost earnings by 120%. Big River Steel, located in Arkansas, is a mini mill, meaning it remelts scrap metal and other metallics to make steel. It is called mini because it doesn't require the capital investment and size required to make steel using iron ore, blast furnaces, and basic oxygen furnaces. Nucor pioneered low-cost mini mill technology in America. How much Big River Steel would sell for isn't certain. U.S. Steel overall is worth about $12 billion. The mini mill is only one of its steel-making assets. Right, so it's only one, but they're looking to get $8 billion. That's why I'm telling you, in my opinion, I'm telling you, there's more value here. With the mill sold, dividend paid, and assets renewed, Ancora says, is it Ancora? Ancora? Whatever. Says the value realized for shareholders would be north of $75 a share. That, of course, is only their projection. I'm telling you, man. 75.80, I think it's a layup. 90, that would be a home run. I really think that's what it's valued, at least. Core's target values U.S. Steel at about 10 times estimated 2026 EBITDA. Nucor, the largest steelmaker in the U.S., trades for closer to 5 times estimated 26 EBITDA. So, in my opinion, I do still like U.S. Steel, but again, I know it's been bouncing around, and every time, someone comes out and says, oh, we might push through the deal. Oh, we might, cancel the deal. I always try to jump on and do an update, even though I know it's a name that not a lot of people are looking for. It's one that has done well for us on this channel, and really nice day today. And again, we're in talks now, so maybe the deal goes through. Maybe we see a spike up again into the 50s, 60s. Maybe we get news of them selling off that asset, right, and bringing in a couple of billion in cash. Who knows? But in my opinion, I do still think U.S. Steel is in play. But we got that news with Broadcom, and we got a little update here on U.S. Steel with some movement today. So I figured I'd just add those into the 3 index update as well. But that's pretty much it. I'll end it there. So once again, Stocks by the Numbers. I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I do want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.